to the AAMI Broker screen. While your questions are coming in, let us have a quick comment about the macro side of things. And we've got one session, unfortunately. We're going to try and cram everything in, but it's open slather. So let me just give you a quick update on the macro, because I haven't talked to you for a couple of months. And then we'll go to your stock requests, which I can see coming through and mostly look to be Australian, but Perry's got some US ones for us as well. A couple of little issues. There's going to be a few pauses here and there as I switch between databases on Normal Gate. So Market Index have the Australian data that they're paying for, okay? I'm still paying for the US data because Market Index has no need for it. So it just takes a minute or two to switch between databases, but we'll make it work. In terms of the macro, no surprises here. And, a couple of months away, and it was an exciting couple of months. And I think where we left you, things were heading down. And it's got to be somewhere around here. And, we're just following the trend. I'm still going to pat myself on the back and tell you that, on this day here, was it? I said something's not right. Okay. I'm pretty sure I got up on AusBiz and I said, hey, we've been long, and if you follow me on Twitter, tweeting the hell out of the bull case and just hanging, on the bears. And on that day said, I'm going neutral, and pretty much in session, we said on that day, okay, well, we need to really start to rethink how bullish we're being. And, that is a great little snapshot and segue into what we're seeing here, because it's no different, and it shouldn't be any different. If I come back to you after a few months and have to say, well, actually, this has been different, or this is new, I haven't seen this before, then you should be really concerned. But everything's the same. Obviously, through here, you know how to read price action, you know how to read trends, you know how to read candles. And this is why I was quite comfortable and resting quite assured that you'd all be quite okay through this period. And then I was also quite just as confident that you'd be able to get yourself back onto the bull case as soon as we see these big white candles, gap and run. I wish I was in session to talk about these gaps and runs. Big white candle here confirming the change, gap and run. And then when you see this gap, this big gap, this is not insignificant. This is an index here. So, this is, and we're talking composites, so 5,000 odd companies. Gap that much, and then look at this smidge little shadow down the bottom, and then that push. A natural response. And natural response as investors is to go, that's too much, or that's too expensive, or that shouldn't be happening. And that's in our tiny little pinpoint brains. But if you look what's happening in the rest of the market is going, you know what? I'm actually really short, and I really don't want to be short right here. And I know there's a big gap up. I'm not going to wait for a pullback. I need to keep buying. And these candles are I just need to be in. A little bit of a wobble here, but nothing too bad. Look at that lower shadow, white candle. It's one of those fighting retreats. It's one of those pullbacks you have when you're not really having a pullback. Lower shadow, white candle, lower shadow, white candle. That's neither here nor there, isn't it, within the context of everything? It didn't follow through even on the next day. And then white, high close. It's all good from here. And then I put out a tweet after this candle. I made it a competition to say, hey, everybody, let me know what you think about this. And Claire had the best answer, which is, you know what? I'll paraphrase Claire's response. It's got my attention, but I'm not panicking. Okay, I can see something's up. Supplies arrived. Ding, 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 ding. Something's different. I get it. But I'm just going to be cautious. I'm going to be alert, not alarmed. And what I said in my response to that thread was, look, tighten your stops. Be more aggressive at your minus 1/3 if you're not sure if there's a 50-50. Should I minus 1/3 or not 1/3 it? Pull the trigger and just be a bit more circumspect. We're not we don't need to rush out and add too much risk. And then look at the next 4 or 5 candles. It's all fine. And then boom, and then you get your little gap here. Even then, it's a bit of a fighting retreat. And this is probably the candle here, which really does tell me something's not right. And then you've got 2 more which confirm that it may not be just a plain vanilla correction to the short-term trend ribbon, which is what I thought it would have been to start off with. A little bit disturbing that we're trying to push back up and we're getting beaten back down. So I think neutral is probably the place to be, coincidentally, where I left you. I think we're probably more on Well, we were neutral anyway because we weren't necessarily looking for shorts, were we? But still fairly neutral here. But I think longer term trend speaks for itself. There's no issues there. I'm not concerned. I'm not, and I know it's January, and January after a good November and December, Januaries aren't great. I put some research out on that on Market Index. Maybe at the end I'll go and try and find it. It's definitely an article you want to read. But it's called January Jitters. Just go January Jitters in the Market Index search window. You want to read that because I actually did quite a bit of proper research to understand what happens in January depending on what happens in December. But typically, the better the December, the more subdued. I wouldn't say bad, because January is not a bad month on average, but the more subdued January tends to be. And then seasonally, February's actually pretty good, and then March we might get a wobble, and then we know we're pretty good into April, and then sell in May. That's the NASDAQ. I don't want to labour this too much, but I do want to get to your questions. I think we'd be remiss if we didn't. I'm not going to go over 100 different stock indices. I just don't see the point. And let me do the Russell, because we should do the Russell. And I think this was even more impressive. I mean, look at that gap and run. I wish I was in session on that day, because that double bottom there, the high bottom, the building demand, and then that's you got to go long there. We talked. I know we left off talking about these different types of setups where we said, you've got your in trend, beautiful, just keep going one. You've got your turnaround one, which requires us. We know that. As well. We've done that many times. You need to get above the long-term trend zone, test, hold, and go. And then you've got the really super aggressive one, which is really kind of this one here, where the long-term trend is still down, but you just see something so good that what's the harm in just whacking a plus 1/3 on it? But then, you're building into a position, and then look at that. That's magic. But just as magic as those are, that is disturbing, especially coming after this and this. This is a disturbing candle, and it contributes to my theory that this is probably a little bit more than just your plain vanilla pullback. Okay, and the source of the problem, you all know already where I'm headed next. I've got to look at the bond market. So we're going to head over here, and I'm going to change screens 100% today. No doubt about that. We need to go away from futures and Forex, and we need to go to indices and bonds. And the rally, why did the rally occur? I mean, when we left off last time, we were up here. And, the drill was saying, hey, as long as rates keep going up, the stock market's going to be a bit stuffed. And lo and behold, look at that. Look at this change in price action. I mean, if this was a stock and you were long, you would have been all over it in terms of applying your minus 1/3 methodology, isn't it? I mean, that's nothing there in itself, but the big white candle, the failure here, and that little upper shadow, the bearish Harami pattern, go Google that one in here, is a pretty good indication. Whether you went there or not, I can't say, but certainly this candle here has got minus 1/3 written all over it, and then I'll let you figure out where it goes from there. But I don't think, if it was a stock, and I want to sprinkle case studies through this, because remember, this is about education as well. If it was a stock, you would have been all over that to get out. But the getting out of this is the getting into stocks, and then we can see why we're having a bit of a speed wobble now in the stock market, and it's because bonds are heading back up again. And stocks don't like higher interest rates. Part of the other reprieve, or a few strings to the bow in terms of reprieves, JGBs, big pullback there. I mean, when we left, they were pushing towards 1% on thoughts that the Bank of Japan was going to end this yield curve control regime. They haven't. They changed the commentary around it. They even changed some of the bands and tolerances around it, but back to 0.6% there, and we saw a similar pullback in Aussie bonds, which has facilitated the rally, and then the rally in bonds has then facilitated the pullback. Can I say, everybody, that everything is as it should be, and nothing is as it shouldn't? This is all stuff we expect to happen. Isn't it wonderful to have that up your sleeve? Let us head to China, as we like to do, because we left when the market was pretty bad and the bonds yields were up, and then it all switched around. But we left when China was rubbish, and guess what? China is still rubbish. It didn't rally. And what does that tell you about the demand-supply dynamics for China? What does it tell you about the risk-taking, risk-seeking environment over there? And that looks pretty darn bad. Aussie resources stocks had a pretty awful day today. No, the iron ore price was down. Iron ore prices nothing like this, of course. But that's not good. That's a concern for me. Remember the phrase that I use, the canaries in the mine shaft, the red flags. I'm always looking for red flags. What could upset the apple cart? And that's one that I think we should keep an eye on. This is the China A50 index, which is the one that the mainland Chinese and fund managers can buy there, and it looks bloody awful. Let's check if it's the property market. I haven't looked at a lot of these charts for a long time, because what I do at Market Index is I take words generally about something to do with lithium, because it's clickbait. I put them in the right order and I post it, and I make lithium bulls really, really angry. And I can tell you I'm really enjoying that. But unfortunately, in my current phase of the role, I'm not doing a lot of macro stuff, and I do regret it. But I am going to try and do a bit more of that as we go along. But there's your problem, the Hang Seng Mainland Property Index. And if I head up here, we are... I haven't looked at this chart for 2 months. That is an absolute train wreck. And why is nobody talking about this stuff? Here we are, all the way up here, near record highs. In fact, one thing I didn't do, and I really should do, and I'm rambling here, but... I can't see your messages, by the way, because it's in a different screen. But when I get back to the messages, if I see a lot of, hey, Carl, stop rambling, that's cool too. But if you say, hey, Carl, I'm glad you're rambling, that's why I tuned in, then that's cool also. We just want to do a quick one on the ASX 200, because we did hit that level again. If you don't read charts, really, you are flying blind, ladies and gentlemen, because why did we stop up here? Of course we stopped up here. There's plenty of latent supply. Latent, not latent, come on. Latent supply up here, and we're experiencing now. But even then, you don't know it's there until you know it's there. And how do you know it's there? Well, that's the candle that tells you it's there. And ordinarily, as I said, I would say, look, it's just, it's a big run. We've got to pull back a bit. Watch your trend ribbons for where that might occur. Any other old points of supply should act as points of demand. And I still don't think that's the case, but as I said, there's some sinister stuff maybe going on that could cause this to be a bit worse. So I think we're still bullish, but cautiously bullish is the right approach. And look, at the end of the day, we're going to look at charts today. I'm going to take things chart by chart anyway. So just because the index is rubbish doesn't mean we can't find good stocks within those indices that will go up no matter how bad the market could get. Let me head back now. I think that's a pretty good introduction. We didn't do commodities, but if you want to talk about anything specific on the commodity, FX or crypto side, put that in the questions. Let me head back to here, which is where I'm going to find your questions. And maybe I'm going to put this window over here, and then I can see them all the time. That would be very clever. Okay, let me catch up on a few of these. The screen is big now. Perry's asking for some US stocks. Let me table those, Perry, and we're going to do US stocks at the end, okay? Good to see you too, Cam. Well, not see you, but see your message. Great to have you back. Great to be back. Michael, it's a little bit blurry. Not sure if it's just me. Maybe somebody can let Claire know if it is her or not. I hope not. We had this problem with Zoho as well. But I think, I know I'm operating on a really good data plan, but other people will tell us. And if it is, I don't know how to fix it. I'm sorry. Maybe upgrade your data plan. I don't know. Pete, I'm going to do US stocks at the end. Tony's saying not a good connection. That is a problem. Adonis is saying, yeah, it is blurry. Okay. There's nothing we can do. We're going to have to persevere today, and then maybe we can find a solution. I examined intras and said no thanks. It says wrong. Don't know what that means. ASX NEU. Okay, let's go here. And we're going to go here. And we're going to go here. And we're going to go here, and NEU. This is the first one. First one back. Now, great chart. I tweeted about it a few times. I reckon probably here, here, and here. I would have tweeted about it. Not probably. I know I did. Because I know their setups. In my book, they are plus 1/3. I would even say that's a plus 1/3. I'd even say that's a plus 1/3. I'd even say that's a plus 1/3. But we know we are a long way away. So as the further away you get from the light green zone, the higher the probability of a mean reversion. So you're going to have to say, well, I might have missed this one. I've got to look for the next one. Okay. How is it going from there? Are we seeing any species-ending events? We're not seeing great candles. I mean, that's the first one. Upper shadow, tried to push higher, hit supply, hit excess supply anyway, and we're close near the lows. Did it follow through the next day? Well, we again, supply day, nothing day, maybe trying to rally, couldn't rally, still can't rally. Don't like that one. Really don't like that one. So, look, I think this is a minus 1/3 here, and I haven't. You know what? Because remember, I haven't put a 1/3 on since I think market stays. By the way, because in that Zoho thing, I wasn't sure what the what I could do with the licensing or lack thereof. But there were 1/3 of back, ladies and gentlemen. In my view, this is, read my lips, this is what I would do. You can do whatever the hell it is you bloody well want to do. But I would go minus 1/3 there. And think about what that means. I'm not selling the whole lot. I'm not dumping this. I just think it's time to take a little bit of risk off the table. And everything else is hunky-dory in terms of the short-term trend. Long-term trend is good. And because this is an outside bar here, we actually haven't seen, by definition, the price action, which means lower peaks and lower troughs. But I think for all intents and purposes, we are largely there. Minus 1/3 or minus 2/3. Look, let me go 1/3 for now. But say that a close beneath here, then it'd be very hard to argue, wouldn't it, that you should continue to hold as much as 2/3. And I'm going to say even beneath there, look, unless you're that kind of person that just wants to go plus 1/3 because the long-term trend's good, and that's cool too, and just stick at the bottom draw and don't worry about it, maybe you're all out there as well. But we know as a minimum what I need to do. You're going to do whatever you're going to do, of course. So that's NEU. I'm going to knock off the offline requests just so I know I've done them. And I've got Brendan with Elders, which is such an interesting company. Obviously, this is actually I think we were looking for longs around here, if I'm not mistaken. Maybe we were. I can't recall. It's a long time ago. And we know that after that occurs, there are no longs. It's a species-ending event. It is not cheap, as everybody told us over and over again on the media and broker reports and all sorts of silly stuff that people like to read. And down she went until we see pretty much the equal and opposite. Pretty much. In percentage terms, it would be. So, well, Carl, that's not the same. But in percentage terms, that white candle is probably very similar to that black one. And I don't know what the opposite of a species-ending event is. The dawn of a new era. I think I like that phraseology, but that is the dawn of a new era. And it's even more important when we don't pull back from it. So this is all good stuff here, and that's really nice. And I'm pretty sure I tweeted on that day. This is unfortunate, and we're going to learn. We probably already know we don't need to learn it, but we're going to learn that not every time Carl says something's going to happen, it happens. And sometimes he's wrong. And I don't know how wrong I am just yet, but yeah, this has not turned out the way I thought it would have. But this is very much our turnaround plays. So we've got our three setups, which is the in trend or pro trend. I don't know. One day I've got to make some software and come up with some fancy names for these, don't I? Until then I can call them whatever I like. Pro trend, and then we've got our turnaround. I'm pretty sure that's what this one is. And then we've got our aggressive turnaround play as well, and this is number 2. So we're looking not to get in, not to think it's a bargain, the PE is too low, the dividend yield's too high, until we see the price interact with that long-term trend zone. Trend zone turns orange, starts to converge. We see some nice price action candles pushing us outside of that zone. Preferably, once you're out of the zone, you get one little test and hold, and it hasn't done it. But yeah, look, buy, hold, or sell is where we want to get to at the end of every stock we look at. And I think we're still holding some of it, but clearly we're not holding all of it. And if we're looking for points where we have had triggers to not hold all of it, then certainly that candle there is disturbing, and it's starting to get to the point where you're really losing a lot of faith after 4 in a row. This one's encouraging that it's trying to hold the light green zone, but then this candle. I can't see any reason to be full risk position here, and the only question for me is whether I'm minus 1/3 or minus 2/3. And if we are only minus 1/3, I'll just give you some scenarios. Then we know where the next point is, where we're going to move to that minus 2/3 position, because on a close beneath, close less than, I haven't done this for a while, have I? Close less than, we are going to be minus 1/3 there. And given the overall trend is not good, that I think actually probably pushes us further and to say, let's go zero risk position beneath there also. It's probably the best way to go. And leave it to Mathan and everyone else to hang on to that if we get below that level. Let's go to Woodside for Brendan. Chart's not much better. It's a shame. I think last time we probably Think Markets webinars looking at Woodside because we're able to look at Aussie stocks. It was looking pretty good. I mean, it was up here. It was pushing towards those highs. The oil price was looking pretty good. And the oil price unravelled and Woodside unravelled as well. But this is why we don't hold on forever and we don't stick things in the bottom drawer. We're proactive. We're proactive, and we manage our risk. And even if you wanted to be that person that says, "Look, I'm gonna do I'm gonna do 2/3 Carl and 1/3 everything I did before Carl." So even though it's blue chip, and even though I love Woodside, I cuddle it close to my bosom at night and give it a little kiss before I go to bed. I'm still going to do minus 1/3 based upon Carl stuff, and then I'm going to say blow it on the last third. That's my stuff, okay? And I'm going to ride that thing all the way burning down into hell. So you don't have to be all of my approach because my approach is probably a little bit hard sometimes on these blue chip stocks, which I mean, hey, is Woodside probably going to go back to $40 at some stage? Probably is. And in fact, I'm not even going to say probably. Woodside will go back to $40 at some stage. And then, if you're all Carl and you didn't get back in for whatever reason, I'm not saying it wouldn't be because Woodside didn't give you the signals, but maybe because there was just better stuff than Woodside around at the time that you were doing. You didn't take that Woodside trade. And it went back to $40. And see, I really should have held on there. Maybe that's a model you can do. There's no hard and fast rules here, but there needs to be, let's say, a majority of a sensible approach. What can we do here? There's not a lot we can do. We've got a long-term downtrend. The short-term trend is trying to improve. I mean, we've seen some great candles. I mean, these are great candles from that low, and in particular, this candle here and this candle here. And when you see those two, big spike in volatility, so we know it's an important day. White candle is a white candle, but then a big volatile white candle is something else with some extra volume in there. And I think that qualifies, and maybe a little bit more would have been better. Then we're probably at a pretty important turning point overall. And then you went into your price action here, which started to be high peaks and high troughs again. And then this candle here, I think, is an important one for me. Unfortunately, since then, it's been a little bit tight, but we are compressing in and around that short-term trend zone, which is no surprise there, and probably also under the influence of this old point of supply as well. If I had it, well, I wouldn't have it. That's the thing. But if I still had that last 1/3, look, I think you can hold it. I'd be concerned if we were to close sort of under here, and then I can't really see a reason to own it because, the risk is we probably go back down and test those lows. But until then, see how you go. Plus 1/3, where do we start to add risk on Woodside? Look, I could only say it'd be the most aggressive type of setup. If you saw, and only if you saw this giant, big, bloody white candle, really actually with some nice volume, just to show me I'm removing some supply here and not just drifting through it. But nice big white candle and a bit of a push in volume, supply removal. And then I think you could go for an aggressive setup, which is, of course, in advance of our turnaround setup. I don't think I need to say any more on that. Let's go to Colin. Colin's got NXL, which I think is a really lovely chart. I've tweeted about it many times. And I guess even in my webinar absence, you still have my tweets, my daily tweets. So hopefully that held you in good stead. Some really nice candles through here. Some really nice candles. The most amazing candle yesterday. Today's candle is a little bit indifferent, but still, pretty good. You might hear some kids screaming in frustration in the background. I don't know why. There's not a lot here. The reason why I'm zooming out is, I love that setup. This is one of our turnaround plays, isn't it? I'm zooming out to see, well, where could we find a big whack of supply, latent supply from the past? And there's not that much. I mean, there's clearly supply here. How do I know there's supply? Look at a big bloody candle, big black candle. So maybe there, and then probably here as well. Well, there you go. We're not that far away. But I don't think we need to panic because just because something was an area of supply in the past, there's no reason it should be an area of supply in the future until we get there and it actually shows you some supply. Look, I can't see any reason to not have a full risk position on this one. Would I be getting in here? No, I wouldn't. Why? Because I just talked to you about these potential latent points of supply. Let's see, deal with that. Let's see what sort of candles we get there. Maybe a little bit of a pullback it could throw in. And then when it starts to throw in up around here, 210, 215, around that level, or even down as low as 2, I think it would still be fine. Then some nice white candles on a pullback in there, that would be when you would add risk if you had none of this at all, or you would increase your risk if you did. I'm not worried about this until we probably start to trade. Well, this is the key candle here, because this is your demand candle. If you can't see that's a demand candle, then you need to sort of do a little bit of this, right, and just clear that out and go, oh yeah, that's a lot of demand there because it's big and it's white. And the only way you get a big white candle, and look at the volume, is if you cleared out of a huge amount of supply, and the only way you clear a huge amount of supply, you've got a lot of demand, so there's a lot of demand there. That's the key candle, because this represents where the funds are buying. If we get beneath that point, what are those funds doing? Well, they're not buying anymore. They've got their shares. And some other funds are selling, so that's not good. But as long as we're above that level, I am hunky-dory with that one. Let us head back here. And what I'm going to do is change the size of that window so I can see the offline requests and the online requests at the same time. And we're going to go for Craig, CXU. I'm going to get to everybody tonight. Don't worry. It might be midnight where you are, but we'll get there. Cauldron Energy. It doesn't ring a bell. I wonder if I tweeted about this. I'm looking at the chart. I bet you I did. It looks fine. I'm going to go ditto on the last one we looked at, which I've forgotten already, which was Nuix. And I mean, this is not a great candle here, is it? It pushed up, it tried to go, here we go. At the start of the day, everybody's loving it. It's on hot copper, everybody's pumping it. And then it found supply. We found supply today, right? Some people said, you know what, that's enough. Boom, sell. And then all the Johnny-come-latelys go, oh shit, I was, hey, do you know this guy over here? He got in at 3.3 and he was just trying to get out at 3.4 and made, $100 or $1,000 or $10,000 by buying whatever he was buying. And he didn't do it this time. He's done it 5 times. He hasn't done it this time. But instead of getting out, right, he's going to hang on until it goes back up. It never goes back up. What we're doing with that shadow is creating latent supply in the system. And that sounds bearish, but I think I'm still a full risk position here. If we see a follow through tomorrow, and I know it's going to suck because you might be giving up some of your profit, then I would then go to minus 1/3 and no more than that because the trends are bloody amazing. The price action's good, so. But you could see a little bit of a spill out. But how the market deals with that spill out tomorrow is the crucial part of it. If the market spills out and you get that opposite shadow tomorrow, long lower shadow, oh, it's the end of the world, and everybody who thought they were going to get 0.1 out of it is losing 0.5 out of it, right? Have you done that before? And then the big money comes back in. The same money that sold up there at 3.6 comes back in at 2.8 or something to buy it back because they know it's going to 4 point whatever. Then that's why I don't want to. I want to at least see that. I'll let the market speak to me. Otherwise, it looks fine. But you might give back a little bit more tomorrow. Let's go to CPM, which is not as good, not as good at all. And this obviously this is a huge indecision candle. This market really is not sure about what it wants to do. That's concerning. And really, actually, the next day. It is not a bad day, which makes the third day in that candle, third candle in that pattern, the worst part of it. So that is a really disturbing area of supply here. This is a very powerful area of supply, and we can see that once we move back into it, we're starting to see some supply again. Not too bad though, not train wreck sort of stuff, guaranteed double bottom sort of stuff. But it is concerning. I would need to see some decent white candles here to give me confidence that we want to tackle that. But I'm going to put this one into the too hard basket for me. It's not one I would ordinarily gravitate to. It's not one I would put in my watch list based upon what I can see today. If you had it, I can see some reason to hold it, some reason, not all the reasons to hold it, but some reason to hold it. I can see this candle here is important. Beneath that, I think I'd be quite concerned. Let's say, but beneath that, I'd be concerned. Even beneath today's low, I'd be concerned as well. Not my cup of tea, this one. Not awful by any stretch of the imagination, but not a setup which just compels me to want to be involved. COE, I think, might be looking a bit. Maybe I'm thinking of Carnarvon CVN is the one I was thinking of. Cooper Energy is not it. But not bad. Hey, look, decent rally there. You can see by the sketchiness of the candles. So you've got like full candles, or just shadow days. It is not the most. I shouldn't say illiquid because there's lots of shares trading, but the price action is not good. Look, historically, now this is good price action. To be fair, look, I could get interested in this if it does something like that. Decent candles. Again, not so much my cup of tea. Look, if you've got it, I can see a reason to hold it. It's not one I'm going to be jumping into anytime soon. So I'm going to be blatantly and brutally honest here, and I'm just going to have to make the best of that, unfortunately. I've never heard of this one before. AcuSensus Limited. And I'm just going to go default zoom. I should have been... Oh, it is default zoom. So it's fairly new. I think it looks good. I think it's extremely illiquid. Instead of getting 20 million shares, I know they were a smaller price. We've got barely 200,000 shares. This is illiquid, and we can see the sketchiness. So that's a little bit of a red flag for me. If it's just me trading this, it's probably not a problem. If I'm going to tell everybody to buy it, then we've got problems. I'm not going to do that, but I will say that the short-term trend is intact. I think the candles are pretty good. I think today's candle is just the most obvious, sensible thing to happen here because we're at a point of supply, and that supply we should expect to see it manifest itself in the market in an upper shadow or a black candle, and that's what we've seen. So everything's probably going to plan here. If I had it, I could hold it. Would I be full risk position after today's candle? Yeah, I think I still can be. If I saw some black candles following through and really confirming that supply is probably a little bit too much, for the time being, maybe I could go 1/3. But I probably wanted to see how this plays out because, this is a nice base pattern after all. Price action is not awful, and the candles previous to this are pretty good. And we are seeing some volume coming in, so I kind of want to see where this goes. So happy to go full risk position on that for the time being. This one's for Tony. And then last one on the offlines is ACF, which is one I have been tweeting about fairly regularly. And is this the species ending event, Tony? Speaking to you in the recording, I don't think it is. Not a good candle, no. The volume's not really telling me there's a whole lot going on. I don't think you need to do a whole lot on this one at this point in time. I can see every reason to be full risk position. I might panic out of 1/3 if we close beneath there, and it's a full black candle, just nothing more than a precautionary measure. And, still really trying to keep skin in the game because that trend is just fantastic. Okay, let's get to your requests. Again, I'm going to try and do the ASX ones, and then I'll change databases, head over to the US. Sudesh saying the screen is good. So now we have to start asking and chat amongst yourself, what connection you're on, like 100 megabits per second and all that sort of stuff. I don't know. John saying his screen is fine. Jackie saying it's only sometimes blurry. Well, that sounds like it's a bit of a connection issue. Blurriness comes and goes, probably to do with streaming. Okay, deep yellow. Let's head over here. How are we going, everybody? Are you still awake? I mean, quite literally, if you're in Sydney, and we're pushing 10:40. Are we awake? Give me some sort of. You can do thumbs up, goods, and we're enjoying it. I'm not disappointing you, I hope. Okay, we're going okay. Good. Adonis said he's back. Let's do deep yellow. Let's park deep yellow. Let's do Boss Energy. I like this chart. I think this is a really good chart. If I had exposure in Boss Energy, I'd definitely be full risk position here. I think I could even go 1/3 after today's candle. Having said that, let me remind you, because I'm not telling you this for the first time, let me remind you, it is difficult investing in uranium stocks. I don't know if you've noticed. You have times where they're bloody awesome, but most of the time they're bloody awful. So don't fall in love with them, and most importantly, don't trade them based upon the uranium chart, okay? Uranium looks good, I better buy uranium stocks. It doesn't work like that. When uranium stocks look good, buy uranium stocks. I think this one looks pretty good. I'm pretty happy with the plus 1/3 there. Paladin, I think looks okay too. I mean, I would have liked a higher close today, but give me one white candle that closes on the high. I think you can add some risk there too, which brings us back to deep yellow because it's kind of the third best in that regard. Not a terrible chart, but not getting me excited right now for an entry. I think if you've got it, you can hold on to it, but be disappointed at the same time because those two upper shadows in the last two candles are a bit crappy. But happy holder there, not adding some risk. What would get me in big white candle closing on the high. But even then, I'm not sure if this is the one I want to attack compared to the other two. Let us keep moving. CIE we have done, Peter. Let's go next to MEI. I'm just going to make sure I haven't missed any. Hey Carl, wouldn't have found US ANF without your analysis. Stellar 2023 under the radar would give the Mag 7 a bit of a touch up. 2024 US retail macro. I'll come back to that one. IEL I've missed, so I will have to do that one next. MEI, I can't remember. I've tweeted about this one. Sounds familiar. Meteoric. Fine. Today's candle, not great. You know, we've talked about this before, but do you just go, do you just see something like that and get so jittery, you fire off a minus 1/3? I don't think so. And I think, you know, we've got 3 of them. Clearly there's some supply here. Why is there supply there? Well, there's really no reason for it, apart from 30 is a bit of a round number, but only a bit of a round number. Let's zoom out. Is there anything holding us back? Well, there is a little bit, isn't there? So, but that's a long time ago. I mean, no, I'm not even going to imply. No, this has got nothing to do with it. It's pure coincidence. I know I've drawn it in, but I'm not telling you that that's why we're stopping here. It's 2000, forget it. Nobody who was worried about that in 2006 is still worried about it now. I doubt it. It's just a coincidence. I can't see any obvious reason for it. I'm not too stressed out. I think it's fine. I'm full risk position here. I'm not adding, obviously, because those three white candles don't compel me to add. IEL, which is an interesting one, got some problems here. Not a buy, obviously, using my model. Using a value investor's model, I'm sure it's a bargain. And it won't be a bargain for me until an aggressive setup, which is you would need the most almighty white candle on a big push in volume to get me in some price action, which at least looks like something like this. But I don't think it's going to happen with an aggressive. I think the earliest I could do here is a turnaround play, which means we need to interact with that long-term downtrend ribbon. It needs to compress. It needs to turn orange. We need to see some nice price action candles in it. We need to get above it, test hold. It's that sort of Elders sort of stuff or Nuix sort of stuff. I mean, don't forget, wasn't it long ago, Nuix was the worst stock in the ASX 200, quite literally. And no, this is not something I'm interested in. I think you could almost short it, to be fair, and the next batch of black candles with upper shadows, I'd be more inclined to short this one than to buy it. That's a no for me. I don't work for anybody, remember, so I don't have to sugarcoat anything, and I don't have to be polite to anybody. No, I don't like it. I will get to the US ones. It will be difficult to go back and do it, but I'll get to them. I don't have a PDD, so maybe that is also a US one. In fact, let me just double check. I don't have a PDD. Maybe you meant something else there, Cam. Just double check that for me. Or it might be an American one. Maybe just put in AU or US as a prefix, just to let me know where we're meant to be. So let me leave that one, Cam, and you can come back to me if I've got that wrong or you've got that wrong. Cock has got CPM, which we have done. We have done that one. Wasn't quite sure about that one. 1AE, which I'm going to put in the same category as CPM. I wonder if they're doing the same sort of thing. The charts look very similar. Not terrible at all. Look, I'm going to go a little bit more than half decent, but it's not enough for me to want to be in this one. I could get interested if I saw a nice white candle through 13, closing above 13. I think that would actually look pretty good. And then you've got a little bit of a leeway because your next big point of supply is up to 18. And we are actually trying to turn around. This is a turnaround play because you can see that we are pushing through that wrong colour. Let's change the colour. That's the same colour as the trend zone. Pushing through there. Coming back testing, and you can see the lower shadows. We're trying to bounce off that long-term trend zone. And why is it bouncing off the long-term trend zone? The long-term trend zone doesn't exist, ladies and gentlemen. Do you realise that? I know you look at it every day now, and you honestly believe it exists and it's on the chart, and the price hits it and then bounces off it. Ladies and gentlemen, it doesn't. It doesn't exist. Only we use these, but it's just sometimes it just turns out to be the case, doesn't it? So it's not bad. Today's candle is bloody awful, but it's not. This is not irredeemable. Is that even a word? Next white candle through 13, I could have a go, but there's too much that needs to happen before that occurs. Bank of Queensland, going to run through these quickly because I don't want to be here until midnight. I think it's fine. Actually, yesterday's candle was your plus 1/3, wasn't it? So that I look at yesterday's candle as being just a lay down plus 1/3. And this is the turnaround setup, isn't it? Like magic. How good is it when I can go from one chart to the next and just say, this is what I'm talking about? And you'll all just be nodding, yeah, Carl, we know it works. Stop telling us it works. You're preaching to the converted. This orange ribbon doesn't exist, right? It's not there. But look what happens. And that candle is the plus 1/3. So today's candle is neither here nor there, but the market was rubbish today. So we can forgive Bank of Queensland not having the most amazing candle today. But happy to be, just the way we're thinking about stocks, we're more likely to be adding risk to this one than not. That's probably too flippant. We are adding risk to this one. We're not thinking about taking risk off it at all. It's turning the corner, isn't that great? We know, and look, I'm not telling you, I didn't tell you to get in at 520, did I? And you probably should say, hey, Carl, you should have told me to get in at 520. And I'll say, I'm sorry, I don't have a crystal ball. I don't know what's going to happen next. Here I am not telling you to get in until close to 620. But that's just the system. If you don't like the system, you don't have to use it. Elders, I'm pretty sure I've done all the Aussie stocks in the list up to this point. So let us do DRUG, which I'm pretty sure is an Aussie one. Yes, let's go. Well, I don't have US stocks anymore on this platform. But buy me a coffee and then I might just put them all in the same one and then we won't have to change databases. And then I can just do them all at once. I don't have to do Aussie first and US second. Let's say we do have, I was going to say we've got a big point of supply here, but it's an ETF. So all the stocks are moving differently and all the stocks in this ETF have different points of supply. So does that mean we can actually use a point of supply on an ETF chart? I actually don't think you can and you should. So that's kind of irrelevant. I drew that there just out of force of habit. So let's just focus on trends then and candles, which are valid, and price action, which is valid also. And I think you've got a great trend here. So short-term trend is good, long-term trend is good, price action is very good, candles are great. No complaints here. Could I be adding risk to this? Look, I think even on today's candle, I think you still can. There's actually nothing holding me back from looking to add some risk on this one. Happy with that one. For you, John, let us go. All good in Brisbane, says Peter. And even better because you're 1 hour less ahead. How does that sound of me in Perth? If you have the time in US NVI, we'll have the time for you, Michael. PDD, Drew, US NASDAQ, we will get to that one, Matthew. Rupam, can you look at DUR, please? I can. Stairway to Heaven, definitely been tweeting about this one. Plus 1/3 on today's candle. Look, I don't see why not. It could have closed better, Rupam, as you know. Rupam, I'm betting you're already on this one. Do I need to be managing my risk? Hell no, there's nothing in there at all, which tells me I need to be anything less than full risk position and really only thinking to add to a winning trade and what is the most wonderful chart. Now, could today be the absolute top of Duratec for the rest of time, and could it end up going to zero in the next 6 months? Rupam is saying, shut up, Carl, don't even talk like that. But it could, Rupam, it could happen. We don't know what's going to happen next. And here I'm saying it's wonderful, and it could turn out to be the worst thing you could do to buy this. But I will still say everything points to buying this and nothing points to selling this, because don't worry what I think, ladies and gentlemen. Think about what the market thinks. There's cash out there looking for the best return right now based upon the universe of opportunity cost. And it wants to be in Duratec. That cash wants to be in Duratec. And people who own Duratec shares, they're considering that same universe of opportunity costs, and they still want to hold their Duratec shares. They're not selling them unless they get higher prices. I tell you what, ladies and gentlemen, it's a turn of the new year or whatever it is. I'm getting closer to my next birthday, but I go to find words and I can't find them anymore. WHC, I get the little spinning circle. Compensated, not complimented. They need to be compensated. Like the word will come. It just takes a little bit longer. Whitehaven Coal, no problems. Hey, it's not shooting the lights out, but it's still pretty good. Full risk position for me. Would I add a third to that? It ain't shooting the lights out. STX. I'm going to do STX. I'm going to do Brett's 4, and then we're done on the ASX. I'm going to go to US. Okay, so no more ASX shares. Strike is fine. No complaints. It is a tough one to trade. Ron, as you would know if you have owned it for any stretch of time, you know this stock sucks. It is a pain in the ass. but it's starting to look good again. And if you want to go on that merry-go-round, you want to go around it again, Ron, that's up to you, mate. That's all you. And I only say this from experience with Strike, but it's not something I'm going to trade. But if you have it and you're a sucker for punishment, then I can see every reason to be forced position on this. To add risk, I think you can, and I think it would be on any pullback and then nice white candle through 50, and maybe even I might even compel myself. No, I'm not going to talk myself into Strike, but it's fine. It's fine. And if you're that way inclined, you love pain, then hang on to it or add more to it on the next move through 50. Let's go to SMR, which looks fine. Today's candle is disturbing. I look at the greens and I go, that looks fine, and then my eye goes to the candles, and then I go, well, but that looks disturbing. That's why I might say something a bit weird. It looks fine, but the last candle is disturbing. Last candle is disturbing. I don't like it. I don't like it with the one before it, but it's no more than minus 1/3. I think that's enough. I'm looking at the volume, a little bit of an influx in volume, but nothing too sinister. But my gut's still saying, let's just take a little bit off the table here and see how we go. But if I'm saying that, then by definition, I'm still saying this, aren't I? I'm still saying this, and everything else is still hunky-dory. Well, I was going to say, if you don't see me, look, if something so terrible happens before next week, you're going to see me next week now. But, that's the sort of price action we know will push us out of another minus 1/3 in sort of here. And, probably here would be your final 1/3. Let us go to MIN, which is obviously not that one. Mineral Resources, it's quite a little bit of a conundrum, isn't it? Is it an iron ore company? Is it a lithium company? And I think it's okay. Is it a turnaround play? It's not one that I'm interested in, but it could be. And if we saw the most almighty big white candle through here, it would actually be starting to qualify as a turnaround play because we're breaking through the long-term trend zone. It has turned orange, it's compressing, the short-term trend is caught up to it and probably going to cradle the price here. But you need to see the candles, you need to see the price. And I'd love to see a little bit of volume here just to tell me there's a bit of supply removal. And I say that particularly for this one because there is supply. There's lots of supply here. And I'm not sure I want to play this game because there's just too much supply all the bloody way up. I know it's not on the list today. Actually, somebody did ask me in an email, so I will actually mention it. But even if this thing does get going again, which I'm not sure it will, there's going to be so much supply all the way up that I'm just not sure how much it's worth it to be involved. So I think Mineral Resources and Pilbara are in a very similar boat. If I had Pilbara Resources right now, well, I kind of wouldn't. But if I had it, I wouldn't be carrying a forward position, not until we have a close above 411, which is above that long-term trend ribbon. And then I could contemplate a forward position on it. Until then, I think you're just very neutral. I can't see a reason to own it, to be honest, at this stage. When confirmation is so close, I can pay just a little bit more and get great confirmation. Why would I own it here? Let us do FMG, SLR, and then FMG, and then we're moving to the US. So let us go here. Not too bad. It was looking quite good, wasn't it? And this is the problem with we talked about uranium stocks, gold and gold stocks. Gold stocks started to look good, and then you don't get the follow through from the gold price, and they start to struggle. When I make that, in fact, when I make that sound, that's not a good sound. But I don't think I'm not FRP here. I'm 2/3 at best, and let's say that beneath here is where you're going to go another minus 1/3. Not maybe that's really a problem. So close less than, and we'll keep the scribbles on the screen so we can come back and look at them in future weeks and see what I wrote. But I think you've got some skin in the game. But I think you're a little bit cautious here. It was setting up as a beautiful turnaround play, and it just hasn't worked out the way we would like, unfortunately. But not awful. And the last one is FMG, and there it is. And I'm pretty sure I did a chart watch. I do chart watches now on Market Index, and I looked at Fortescue. It might have been there. It might have been there. It might have been there. It might have been that day. And I said, look, there's nothing. I can't see anything in the chart that would tell me to sell. And on that day, that was absolutely the case. There was nothing in the chart to tell me that you would do anything but hang on to it. And then that's not the case anymore. Now, there is stuff in the chart was that day there. Now there is stuff in the chart that would tell you you don't need to have a full risk position. I think this candle is kind of it for me. I know I'm looking at it one day, one day too late, and you can't go back in time, but hopefully you agree that's the candle. Today's candle, would you go a second minus 1/3 here? I don't think you're far away from it. I don't want to see it close beneath that trough there. So let's say I don't close beneath that one. Then we would go a minus 1/3, and then you can choose to do whatever you want to do with the final 1/3, isn't it? And if you want to be that Fortescue lover, just see how you go with the last 1/3, but you take some off the table. And don't worry, if there's a big white candle that starts to go back up again, we can always add some risk back in, and you've still got some skin in the game. All right, I'm going to change the database now. It's going to take me a few seconds to do. In the meantime, let's go here and remind myself where I'm doing it. Over here, settings, login details. I'm changing it from the market index login, which they don't really know I'm using their login for ASX data, but that doesn't matter. And we're going to turn that off, and we're going to click update, and it literally will take 90 seconds to get it back again. In the meantime, what I will do is go here and just double check I have answered everybody's questions. I've got Perry's, I can see your stocks there, Perry. Yep, pretty sure I got everyone. Okay, let's go back into Amy Broker. You should see it come back on screen. And ASX stocks no longer function, but that's okay because US stocks do, and maybe they don't, but they will. Let's go here. Actually, hasn't completely gone through yet. Let's try that. Try again. I've tested this. It should work. We go MSFT. It's not there, but I've got all the US. What am I missing here? Let's go. Hello. Yep, that's all working. Okay, maybe we're not going to have it. I swear to you, I did this multiple times today to double check it. It was all hunky dory. Try one more time. I get the feeling I'm not going to have any success here. Next automatic update. Let's go database. Active, final. It should be there. Go clean up. Okay, let's go that. One last thing. Nope. Okay, I don't think it's going to come back. But that we don't panic because I have other ways. We could just do it through here. One button press. Here we go. I forgot to press the maintenance button. All right, we're back. We are back. We have US stocks. Okay, let us do Perry's. Thank you, Perry, for persevering with that. And we're going to do, first up, WRB. There we go. WR Berkeley Corp. Okay, good trends. Short-term trend, long-term trend is good. Candles are good. Price action. Look, it's good through there, and we, in terms of high peaks, high troughs with separation. In fact, I can see a little peak trough move through there. No, it's fine. It's absolutely fine. And obviously we've got the big supply zone potentially here. And the reason why I'm drawing it in there's no accident, the exact high and low of that is to take in that point of supply and that point of supply, and that gives me a range where we probably can expect to see supply. We're not seeing it though, it's not manifesting itself, and that candle is exemplary. I'm just going to click on this, I'm going to zoom out, I'm going to find that it's blue sky, so there's really nothing here holding me back apart from my trepidation about that supply zone. If I had it, I would hold it 100% because we're not seeing any signs of supply just yet. Would I buy it? I'm not so sure because I'm just a little bit concerned about that. I could get to a plus 1/3 at most at this stage, but certainly if I had it, I would hold on to it. Let us go over to here, and we will come back because those charts are meant to be clean because I put those on the internet. So we're going to go back to here where I can continue to draw. And we are going to go to Perry's next one, LUXH, which looks very, very good. And let me just zoom out. We are blue sky, and we don't have any major points of supply. We've got a little point of supply here. This is a minus point of supply. And the difference between a major and a minus point of supply is significant because if you'll remember, the major point of supply is the highest point between a medium-term uptrend on its right-hand side and trying to do this quickly. Oh gosh, eventually we do get a medium-term downtrend on its left-hand side for the uptrend, right-hand side, and this is what we call a major point of demand. Okay, so it has an uptrend on this side and a downtrend on this side. And that uptrend and downtrend defined by higher peaks and higher troughs on the left and lower peaks and lower troughs on the right. Okay, so this is a major point of demand, major point of supply, and that's why I was a little bit circumspect there, and I'm less so for the next one, which was LUXH, because this is only a minor point of supply. We do not have that price action, that right-hand side lower peaks and troughs. It's just a short-term trend. This is exemplary. I can't fault it. This is a plus 1/3 for me. That is the best chart I've seen today by a long shot. Thank you, Perry. CSWC is also very good, and I reckon if I do this, I am going to find a little bit of a something there. So let me draw that in and then go back to my daily chart and I'll be able to see where it is. And the good news is I can't see where it is. There's a fair bit to go. And if I'm going to get a stop, where's my stop going? Look, I could probably squeak one underneath that big candle. Some people might feel more comfortable under there, and I would say that's probably overkill. I think if you close beneath that level, there's really something wrong and you shouldn't be there. I would say if you close beneath here, that's where you are at the very least starting to get out some, and maybe that's your final 1/3. So if my stop is here, my entry is here, can I make 1-to-1? That is the big question, because I want to be able to make at least what I'm risking on this. And who's to say we're going to stop here? That's why it's only 1-to-1. People will often ask me, okay, Carl, why don't you have 3-to-1 or 4-to-1? And I say, well, I don't know if we're going to stop there. I know it's an old point of supply, but we don't know if there's going to be supply then until we get there. And we may just go straight through it. Okay, we don't know the future. So I can definitely make 1-to-1. I can't see any reason why we can't go plus 1/3 on this one today. It looks fantastic. And Perry's fourth and final one is TMUS, which is Telecom Mobile, T-Mobile. But I think it's a Telecom. Maybe it is. And I'm going to zoom out, and it's blue sky. I can't see anything there to hold us back. So really, no reason why we can't be in this. I think the price action is very good. I think the candles are amazing. I think the trends are amazing. So if I can't fault something, by definition, it must therefore be plus 1/3. So we can see Perry has picked up 2024 where he left off in 2023. Thank you for those, Perry. And on behalf of everybody, you do get you've had many thank yous in the past through the messages, but you can see them now. Let's go MCK. This one's for Peter, which I think looks very, very good as well. If I had it 100%, I would hold it. Could I add to it? I don't see why not, actually. Nice little breakdown here. You don't often hear that, but I like it when things break down and then just rip back through the highs, because a lot of money is on the wrong side of this now. They're caught short by that, and then they want to get back in because the research that got them in the first place is, now reminding them of how good this one is. And it is very good, and it has been good for a very long period of time. Look, it's probably going to be a bit of a slow and steady one, okay? But there's nothing wrong with that either. So I can't see any reason. I know last night's candle wasn't the most bullish showing in the world, but just based upon that prevailing trend, and it's clearly excess demand. Happy to go plus 1/3 on this one. And of course, if you have a full risk position. Let's go to the next one, because I've lost my place. NOVO, which we can see make sure that's the right one. NOVO, not NOV, because often I'll start talking about something and I realise I've got the wrong one. And I might have the wrong one there because I'm not seeing an NOVO there. So Peter, just double check that one for me. Am I doing something wrong here, or are you doing something wrong here? And it's not NOVO, maybe it's NOVA. Let us move to the next one then, and we will go to SMLR, which is not that one, but it is coming up. There it is. Not bad, actually. Yeah, look, definitely more of a turnaround play, and you can see the big white candles here, which confirm that it is a turnaround play. And it's around here where you are starting to get involved. Probably not the first candle. I don't think that's enough. But that second candle there, where you can see you're closing above that point of supply, for me, that is the plus 1/3. I know this is all historical. It's not helping you now, but hopefully it does help you to see what the setup is. You can use it in the future. And then looking at this little candle here, that's where if you did get in that first time, that's where you're looking to add some risk and go your second plus 1/3. And probably all in by this one here, which I will point to in a second. So you're on this. You're definitely full risk position, and by the time you achieve your full risk position, it's probably starting to go a bit sideways. I don't think you need to do a whole lot just yet, but we do have a point very close to here where you would definitely start to lighten the load. I don't think you've done anything yet, but I think it's more than a minus 1/3 through that level, because it's, for all intents and purposes, a pretty good proxy for the bottom of that short-term trend ribbon as well. So I'll probably just go minus 2/3 for precaution there, and then just see how you go on that last 1/3, because the long-term trend is turning up. But I can see full risk position just for now. Would I be getting into this right now? No. There's absolutely no reason to be buying this now. Why? Because of the lower peaks, the upper shadows are clear. There is supply here, and that's why I'm feeling a bit stronger about doing the 2/3, the minus 2/3 there instead of just the 1/3. Let us try and find some more of these US stocks in amongst all the Aussie ones. And if I miss yours, I apologise. PDD, just ask it again when I get to the end. This looks amazing. Could I go plus 1/3 tonight? Look, probably not tonight. I'm not far off just saying, it's good enough to do. But let's just get any white candle with a close near the high is where you would do it. And somebody asked me towards the end there to talk a little bit more about gaps. And gaps are just this huge change in thinking about a stock. It's just this tectonic shift in what investors perceive the future profitability to be, and how much they want to be involved in that. And that creates, gap up. Obviously, gap down is when people think it's going to be awful. And the most important thing about the gap is the lack of pushback into that gap, the price action. When you see the gap and run, it's very powerful. And it's just smacks of excess demand. People they don't want to sell. I mean, you've just all of a sudden you've got an extra 20%. You still don't want to get out. What does that say? And people are still trying to get in. So very happy with this one. Next white candle, close on the high. It's a plus 1/3 for me. Let us keep moving. That was for you, Cam. Hopefully that answered your question. A and F, which was from Matthew. Oh wow, look at that! Isn't that wonderful? I probably still have. No, I'm on a new laptop, everybody. So I don't think I have. I have all the old scratchings. I don't have the old scratchings, but from our old webinars, they don't get transferred when you install on a new laptop. I want a new laptop, ladies and gentlemen. How about that? It is working. It's functioning. It's not overheating. No ice packs, I can assure you. It is the duck's nuts. This thing. It's a Core i9, 32 gigs of RAM. It's got all the good stuff on it. So. It'll keep us in good stead for many, many years to come. What a wonderful chart. I think I'm still full risk position, but as we know, anything beneath here, we're going to start to manage our risk on that one, but still pretty happy with that one, Matthew, and I'm glad you made some money on that. US retail macro, I don't really follow the US retail macro, so I don't know, but go and look at the charts of US retail stocks, and that's going to give you all the information you know, and don't listen to what the experts tell you. Let us keep moving. We're going to find the next US stock, which is NVO. Maybe that was the last one there that I might have had the wrong code for. This is Michael, but this one is fine. Novo, maybe this is the one. Not Novo as a ticker, but Novo as the name. Looks fine, no complaints. Full risk position. I'm not adding risk, though, based upon that last candle. It's not screaming excess demand to me. But next white candle, high close, I could certainly add some risk to that because it looks amazing. And, all blue sky from here. So no complaints at all, full risk position. I've done all of those because I have to go back up to find the US stocks. Play in the USA, let's have a look. Dave and Buster's Entertainment, which these guys bought something in Australia, did they? They bought the theme parks, the US theme parks, wasn't it? From AGI, ALD, I don't know. Stop trying to think of the fundamentals, Carl. Look, it's fine, but I'm growing a bit concerned. I don't like these big white candles. I don't like the fact that it's pushing into the old point of demand or point of supply, and there's two of them. So just drawing them in for you. So there's one there. I hate the way this keeps going to dotted lines for no good reason at all. Go there. Now what are you doing? Okay, there. So don't forget, good price action, ladies and gentlemen. We want to see. Why is it not doing that? Anyway, we'll do it this way. That's my good price action, where the last trough is at or above the second from last peak, and we have come deep into what should be points of demand, the old points of supply. And in fact, we're just starting to test some of those actual points of demand. So a little bit concerning there. Look, I think you can go full risk position just for now, but I'm looking at last night's candle as the key level, and we've also got $50 and the light green zone. It should be bouncing from here. We should see excess demand from here if this trend is going to stick. If it's not, it's going to close beneath tonight's low, and for me then I'm probably a little bit stronger than minus 1/3 actually, probably going to go 2/3, but still going to give you some skin in the game. Let us go to Michael has corrected NVO. Thank you there, and Peter also. I think I'm at the end. I'm all good. We are done. So I'll give you literally the next one or two that comes in if you've been sitting on one. But otherwise, I think I've done everybody's requests, and I'll let you go to bed. UiPath looking. Look, it was looking. I'm going to say was looking great. And unfortunately, it hasn't followed through, hasn't delivered on its promise, hasn't it? Because I would have said to you, again, here's the gap. So this, this is a turnaround play. So we've got a turnaround play. It's doing all the right things. Boom, hold, nice, all good. And then we get this, and we get that, and then we break through that. And really, this is your minus 1/3 here. And I don't think you had to do it before that. And I think that candle is enough to go minus 1/3 just in and of itself, because it's just confirming what's there. And then I would say you've got a little level here. You're only holding 1/3 would be my view. And I think a close beneath that low again is going to get you out of this completely. And that's just my opinion. Now, I don't know the fundamentals. I always say that. It could be on the verge of the most amazing breakthrough. I just don't know. But I'm just speaking... hopefully I'm speaking the words that the market is trying to communicate to you with in terms of supply and demand, and it's not doing what it should do. If the people that know, and you know who I'm talking about, the people that really know, if they know this is good, they're not going to be behaving in that fashion. So we're looking at their behaviour there for cues on what we should do. And if you wanted to, just sort of maintain 1/3 on that chance that boom, they hit it, and that's your big white candle, and you would have regretted the hell out of it if you didn't have it, then maybe that's one way to function here. But yeah, the candles aren't looking great for me. I can't see a reason to go full risk position. At most, plus 2/3, but yeah, probably more like only 1/3. Bitcoin and Ethereum, and then I've got PLTR is the last stock we'll do, and then we're going to finish with Bitcoin and Ethereum. I can't not talk about those. Palantir, a little bit like the last one, where it was looking amazing and just hasn't lived up to the potential that was there, substantial potential. And it kind of looks a little bit like the NASDAQ, isn't it? Sort of having that run, having a bit of a pullback. So maybe the broader market's a problem here. Well, I can't see a reason to be full risk position here. And I can see lots of reasons for you to be out of it, as in, I think you really should have been out of it by now. If you're still in this, you are not following my model, okay? You are ignoring my model. And this is giving you so many reasons to be completely out of this one. And whoever asked this one, maybe John's twitching a little bit as I say it. So, I know you're right, Carl, and I haven't done it. It's tricky for me to say now. We've got a couple of white candles in there, and we're at the long-term trend ribbon. So as much as you really shouldn't have any risk on this one, if you do, you're probably going to want to just see how this plays out. And if we start to get a cluster of white candles here, then we're probably okay. If we see more black candles in here and a little dink like that, I think you're in trouble, and you've got to start to do the right thing. And certainly if we're closing underneath, I'm going to say, well, whatever that low is there. I was going to say 15, but I think that low's there a little lower, so it could be more like 14.50. But close below 15 wouldn't be good, and 14.50, I can't see any reason to still be in it after that. John's saying he got out a week ago. Okay, well, I'm relieved, and I hope that was the final third of many thirds which started to be implemented above 20, John. What is the total cost of your software and data? So Sudesh, this is not my software. I don't own this, and I don't earn a cent. If you choose to go to Amy Broker to buy it, it's about $600. The data's the most expensive thing. It's about $600 a year for US data, and about $400. In fact, it is $400 a year for Australian data. Okay, so you're looking at about $1,000 a year if you want to do Aussie and US. So it's a bit painful, but it gives me the ability to run my scans, which we haven't done. And if you're not going to run scans and you're not going to program this software, Sudesh, you don't need it. You don't need to spend that kind of money. TradeView, which is here, will do all the stuff we just did. Okay, there's TradeView. And if I go PLTR, I'm going to get Palantir Technologies. Now, this was a little bit of the data, the Buy Me a Coffee thing, okay, which I'm not trying to plug it, but again, there's an upgrade I can do here. It just costs more money, where I can share with you my trend ribbons in TradingView. So I can actually give you the ribbons without having to give you the code. So I can keep the code to myself, but actually be able to share with you as an indicator that ribbon, and you'll be able to use it. So again, a little bit of a plug, go to the Buy My Coffee, cover my costs, and I will happily do that for you. But Sudesh, I think you're going to be fine. If you don't have that programming ability in Amy required for Amy Broker, I think you'll just be fine here, and this is a lot cheaper. Okay. What's wrong with using Excel data under data type stocks? I haven't used Excel to analyse my stocks for about probably 25 years. Just a bit more clunky than Amy Broker, but Amy Broker's kind of a fancy Excel spreadsheet, but that would be probably disrespecting Amy Broker a little bit. I do want to do, I'm in the right place actually, because I want to do Bitcoin and Ethereum, and then we're done for the evening. I would love to stay and chat to you until tomorrow morning in Sydney, but I cannot. Let's go to Bitcoin. And remember I tweeted that chart, and I meant to respond to you, and I just didn't get the time. And I tweeted the chart. It might have been here. I reckon it was this day here, because I got a little bit excited on that day. And I said, what's wrong with this chart? ? And you all came up with all these different ideas. And many of you said there's nothing wrong with it, which is kind of the response I wanted to get, because I felt on that day there was nothing wrong with it. But a few people did point out, big black candle, point of supply, and that made me less excited about it. You kind of rained in my parade a little bit. But we're still going okay. We're fine. I'm actually at a point now in my crypto wallet where I'm actually making money. How about that? For the first time, and I think since the very start of me tinkering with crypto, I'm actually up. Bitcoin and Ethereum are still my two major holdings by a long way, and it's their progress that has helped that to occur. No complaints. Happy holder there, no doubt about it. Hodling like hell. Ethereum doesn't look anywhere near as good as Bitcoin, to keep that in mind. So if you're going, oh, Carl's excited about crypto, I'm going to get into some crypto, number one, that's not a good way to think. If it looks good on the chart, then get in. Don't worry about me when it comes to crypto. On stocks and other stuff, I'm totally disciplined. On crypto, I've got no discipline. It's no Ethereum. I wouldn't go Ethereum because you think you can buy more of it, then you can buy Bitcoin. Bitcoin is still the main play. It is the only show in town. And maybe we might get these ETFs coming this week, and that could be the catalyst for the next move into 50. But I think we're very much in this next phase, and don't worry, this phase will flame out and blow up and explode like the last 10 of them. But hopefully we get to 80 or 100 before it does. Anyway, John's saying you might be able to do something to do with stocks and Excel. It's free with Microsoft 365, but I haven't investigated that one. Okay, I think we are done. I'm going to head back to